Hallo und herzlich willkommen bei philoro TV. Mein Name ist Joachim Brandl. Ich freue mich, dass Sie heute wieder mit dabei sind. Ich begrüße heute einen Gast, nämlich Philip Newman, Managing Director bei Metals Focus, einer der weltweit führenden Beratungs- und Analyseagenturen am Edelmarktsektor. Sie erstellen für weltweite Kunden Analysen, Statistiken und Prognosen. Und für Philip werde ich jetzt auf Englisch weitermachen. Hi Philip, so good to have you back on our channel. How are you?
I am very good, and thank you for having me on again.
We will just start right away. Let's talk about gold, because this has been the topic over the last couple of months, actually. The gold market has been in turmoil since the summer. We've seen an unprecedented rally. The gold price has surged before the Fed cut interest rates, and even more so after it did. We have now passed $2,700 and comfortably passed them. Where do you think is the limit? Is there a limit?
Well, I think there's always going to be a limit, but I think it's really quite incredible, as you say. And I think we, as analysts, are sort of sometimes running to keep up with the rally that we see and adjusting our views of the market. So, from our point of view, we do see further upside. I don't think it'll be a straight line. I think we have to expect a correction, but I think importantly, I think any correction, would be short-lived, perhaps quite shallow. Maybe the low is, well over, say, 2,500, which in itself is quite a staggering statement, I think. But as I said, I think that'll be short-lived, and then it will continue to rally. I mean, it's quite possible that, early next year, could we see the gold price beginning with a 3 at 3,000? Even just saying it to you now seems amazing to say, but I think it's and as we'll explore over this, our discussion today, I think there is, every chance you could achieve that.
Um, I think it was Ronnie Stöferle who half a year ago told me that by the end of the decade, he thinks we might be somewhere in the 4,700s. Is that, I mean, that seemed absolutely science fiction back then when he told me that. Do you think that might be something that could actually happen within the next 4 to 5 years?
Well, I think in his defense, if I was talking with you a year ago about $3,000, if I'm being blunt, in terms of, I guess, a base case scenario without another global financial crisis, I would have called $3,000 science fiction, to be blunt, in those parameters. I still think that the values he's calling for perhaps are quite elevated. We don't see that. I think for talking about a price well north of 3,000, you would, I think, need something quite substantial, and not just a global financial crisis. You would need something quite aggressive, such as, and it's not perhaps nice to discuss these things, but perhaps China taking some action with Taiwan, something as dramatic as that. To be honest with you.
Hmm. Now, even before the Fed cut the interest rates a couple of weeks ago, we saw one record after the other. So my assumption, or the assumption that I read in many articles, was that the interest rates had kind of lost their grip on the gold price, and that other factors had taken over, like central bank demand, global instability, emerging markets. So from that, I would conclude that what we see now is a combination of these other factors and the Fed cuts, the rate cuts, basically. What do you say to that?
Well, I think it's really all of the above, working together in a positive way from a price standpoint. So I think if we start off with the Fed and think about, as you said, the price was ramping up even before they cut. I think what was important there were the expectations of what the Fed would do. And, before the cut, it was becoming increasingly likely that the Fed would start that rate cutting program. And the fact that markets were expecting the Fed to have a more dovish stance, not just for this year, but markets looking, or investors looking through to next year as well. I think this is really what was helping to propel gold higher, as I said, even before the Fed did cut rates. So I think that was exceptionally important. I think your other points are equally valid as well. So I think from a safe haven standpoint, even though I think, if we're honest, investors had, I guess, priced in mostly what was happening in terms of Russia's invasion of Ukraine. I don't think that was a particularly big driver, but I think investors were increasingly looking at what was going on in the Middle East. I mean, if we briefly dial back to last October, in early October and late September, prices were weakening quite significantly. But then, unfortunately, we had the events in terms of, with Hamas and Israel in early October, and that changed things significantly. And I think where that was really, if I could use the word, interesting from a price standpoint, is that normally when you have these awful events, you get this knee-jerk reaction from the gold price, but then quickly it settles down. And we certainly didn't see that. It continued to strengthen through the fourth quarter. And of course, as you mentioned earlier, what we've seen this year as well. And I think, why that's perhaps different is that investors were thinking about, okay, would that spread across the Middle East? What did that mean for trade? What does it mean for oil prices? And would we see inflation where, there were signs even back then it was starting to be contained? Would we see a reversal? And while that was also important, what would that mean for the Fed? Would expectations of its dovish stance, change? Would it have to pivot and become more hawkish? So I think that's why it was quite important. There's a lot of unsettlement, investors unsettled by what was going on, worried that things in the Middle East would spread to the real economy, so to speak. Mm-hmm. So I think that was exceptionally important. I think the other thing we've seen, and perhaps more so this year, is the diversification argument. Institutional investors I'm thinking of now, that already invest in gold, maybe they have, 4 or 5% by value gold in their portfolio, and the way equities have performed so well, hitting those record highs, well, that meant investors had to go back into the market, buy more gold to ensure they maintain that certain level of that portfolio. So I think there were quite a few reasons altogether. I think the other thing which is important is that I think few investors want to bet against the market at the moment. So I think that's why, if you look at, for example, positioning on the CME New York, the scale of gross longs or long positions, they've come off recent highs, but they're still exceptionally high. And in value terms, they are close to being record highs as well. And if I can, I think the final point, it's a bit of a cliche, but the fear of missing out. Those investors, perhaps like me, is my skepticism as an analyst, that when we went through 24 and 25, they didn't believe it had momentum or it wouldn't last. So I think, if we do have a correction there, I think there's a lot of money on the sidelines waiting to come in, which is why my earlier point about that the floor, I think, is so solid. Mm-hmm. And you have that credibility, be it 2,500 or perhaps 2,550, wherever it may be. But that's a pretty exceptional floor as well, to which you can then build on again.
Mm-hmm. Let's turn the argument around. What do you think would need to happen to make an end to this rally? Is there anything that could happen that could sort of turn the market around into a bear market? I don't know, the Fed rising rates again because inflation surges back up. Anything that comes to your mind?
Yeah, I think you really hit the nail on the head. I think that would be really, I think the big factor, a real surprise by the Fed, because now markets, if we think about, the next meeting, which is just after the US election, markets are pricing, I think, a 25 basis point cut. I think the probability, is exceptionally high. So that gives you a level of certainty. And as I said, the markets are looking beyond that to further cuts in 2025. So to your point, I think you would need to see something quite dramatic to see that turned around. And we've spoken about some of those dynamics that could see a return of inflation, for example. And so, if that required, a wholesale rethink by the Fed, something quite dramatic like that, then yes, that I think is something that could cause that as well. We think about the impact that would have on equities as well. So I think that is something that could cause liquidations in the market. And given that so much is driven by investors at the moment, then, if there was heavy selling, then I think that could break through, various levels of support in the marketplace. I think, if I may, just bringing it back to the previous answer, if I can, one other area, and again, something you touched on earlier, was, central bank buying. We have seen pretty decent levels of acquisitions by central banks. So I think that's helping to provide a floor as well. And I think the other thing which is really interesting is that, if we had this conversation at the beginning of this year and we're talking about gold through 2,700, I would have expected, recycling to be much higher, jewelry demand to be far weaker. And yes, both have responded, but not dramatically either. So I think that's also helping to provide some support to the price.
Mm-hmm. You just mentioned the US election. That would be my next question. I've also read quite often the assumption that whatever the outcome may be, whoever may end up being US president, he or she will basically have to further expand the US debt, thus weakening US dollar, and the result would be a further push upwards for the gold price.
Well, I think you're absolutely right again. I think that perhaps the main difference, from that narrow point of view, is that, I think the independent analysis of both of their policies would mean that I think Trump's administration would see the debt rise much more than under Harris. So from that point of view, that should be more gold positive. Of course, we're leaving aside their views of the world, how they would operate. And that could also be quite interesting from a gold price standpoint as well.
Mm-hmm. The other big player is China, and the Chinese National Bank has been on basically a buying spree for the first half of this year, and then suddenly stopped buying gold, as well as the private customers have stopped. I read in one report that gold dealers report a 50% drop in sales, in retail sales, this autumn, because the high prices basically take their toll on private demand. But what's going to happen to the gold price when China comes back into the market, like the private sector as well as the national bank?
Well, you're absolutely right, and I think we have seen the market, move to a discount for some time now in China, reflecting those two developments that you rightly pointed out. So I think it would be really interesting if both or one of those does return to the market. I would suspect it wouldn't necessarily drive the price higher in terms of the amount of demand that we would see, but I think there were two developments there. Firstly, it helps to solidify the floor. I think that's very important. But I think also from a sentiment point of view, if we do see the PBOC return as a buyer, then I think that could be gold positive. But I think what's been really encouraging, and this has been public, you've seen the likes of, I think Poland has announced recently, they've been buying, Hungary's been buying as well. So I think because you've had that broad church of other countries that have come into the market, I think that's helped the central bank as an overall community to remain important buyers. But I think, two things. As I said, you could have the floor solidifying that, and the sentiment of China returning as an official sector purchaser.
Mm-hmm. Let's turn to silver now. Silver has, I just checked it before we speak now, the gain within the last year to year, is even bigger than the gain of gold. I think silver has gained roughly 48% or something like that within a year. But people do talk a lot more about gold than about silver. Why is nobody talking about silver?
Well, yes, to some extent. I guess from when we're thinking about precious metals, for example, and safe haven, then that does tend to lend itself much more towards gold than silver. The activity on the central banks is a gold story as well. So I guess you could argue that does, again, lend itself to more conversations about gold. Silver, I think, is very interesting from a couple of reasons. If we think about its underlying supply demand, and we look at that from the totality of the market, well, it's in a significant deficit. It's been that way for a few years now. I think 2022 was the first year it went very substantial in terms of the scale of the deficit. So its underlying supply demand is very healthy, even though at the moment there is a lot of metal, I think, across Europe. If you speak to some of the industrial players and other companies that are, have a large exposure to physical silver, there's certainly a lot of metal that's available. But that notwithstanding, you do have, from a global point of view, the market, which is quite healthy. I think from an investor standpoint, it can attract investors from a speculative interest. But I think some investors, have been, until recently days, disappointed with its price performance, especially, gold hitting various highs. Yes, silver's picked up, of course, but you've still seen the ratio, hold in the low to mid 80s for quite some time. And I think that maybe argues to your point about why silver hasn't had the coverage. What's really interesting now is that changing? The price is well over $34 an ounce. Gold silver ratio below 80 now. And I think that's really interesting. Will we see investors focus more on silver than gold? Some investors may think, you know what, gold's doing exceptionally well, but it's at highs already. How much more can it gain? Silver is still well below its highs of a decade ago. So you could see some investors thinking about that and, reallocating in favor of silver. Globally, from a value standpoint, it's a much smaller market than gold. And so that can lend itself to a much more volatile price. And so, maybe we'll start to see, it pick up. And, whereas as we talk now, it isn't that far below $35.
Mm-hmm. You just mentioned the supply deficit. I checked it. You're exactly right. This is 2024 is going to be the fourth year in direct succession with a deficit. Is the $34 that you just mentioned the first result of this deficit, or when is it going to hit the price? Because at some point the price has to go up, basically, if this deficit persists, or doesn't it have to?
I think, we've had the deficit for a while, as you rightly pointed out, and that hasn't really impacted the price. It's been much more about investment. It's been much more about concerns instead of the Chinese property sector, what that meant for the Chinese economy, how is that weighing on some of the industrial base metals. Silver, as you know, can behave as a precious metal and an industrial commodity. And so I think that's weighed it down, hence why the ratio has held in those levels. But we were, when we try to crystal ball gaze out, we do see that ultimately silver will benefit from ongoing deficits in the marketplace. I'm not sure that's the reason now that silver's doing well, especially, the fact that physical investment, and as in coin and bar, is exceptionally weak in Germany, the US, Australia, some of these key markets. It's certainly struggling. So I think there's a lot of silver around. That's why I think, for me talking about a deficit with you today, you speak to some industrial companies and I think they'll be scratching their heads at me saying that. So I think right now that we're not seeing that deficit impacting the price, but I think ultimately it will.
Thank you, Philip, so much for your time. It's always a pleasure to talk to you. Zum Schluss noch an Sie die Erinnerung. Lassen Sie uns ein Like da oder einen Kommentar, entweder gleich hier unter dem Video oder per Mail an tvstudio@philoro.com. Und wenn Sie nichts von Philoro TV verpassen wollen, dann abonnieren Sie am besten gleich unseren Kanal. Philip, thank you one more time. Hope to see you soon. Und Ihnen sage ich danke fürs Zuschauen und bis bald.